Welcome to Alpha Recap. Thanks for joining us after the close. We've got a lot to unpack from today's tape. And as always, if you have questions, you can reach us at stockalpha.ai.
Thanks. Glad to be here. There was a lot of noise today between the jobs print, earnings, and some wild microcap moves.
Let's start with the big macro headline. The March jobs report surprised to the upside, and US equity futures slipped into the weekend on that news.
Right, and the market reaction made sense in context. A stronger jobs number generally pushes up near-term rate expectations, which can sap momentum in equities, especially longer duration growth names.
So, what really stands out here is how a single macro print can force a tactical reassessment across the board.
Exactly. I mean, when you step back and look at this, tighter labor signals usually mean higher odds of a higher for longer Fed path, and traders price that into futures into the weekend.
But it wasn't all one way. Some technicians flagged a bullish breadth signal that could suggest upside momentum might reassert when trading resumes. Help us translate breadth into plain English.
Breadth is basically how many stocks are participating in a move. If the market pullback is narrow, only a few names falling, but the number of advancing stocks is still strong, that suggests underlying health. So even if headline macro pushed futures down, a positive breadth reading can argue the sell-off was corrective rather than trend-changing.
So, a divergence between macro headlines and market internals.
Right. And the other thing is, technicians will watch if breadth deteriorates further or snaps back. That'll help tell you whether this was a one-off or something more persistent.
Moving to corporate news. Earnings were mixed. RCM Technologies reported an earnings per share beat of 13 cents and revenue above consensus, while Icon missed by 2 cents with revenue roughly in line.
Those are good examples of earnings dispersion. A 13-cent beat for a small-cap services company like RCM can signal margin recovery or better operational control. A 2-cent miss for a larger name like Icon is statistically small, but in a jittery market, even small misses can draw attention if guidance is cautious.
And then there was Lucid. They reported first quarter vehicle deliveries below estimates and blamed supply disruptions.
Yeah, honestly, I was a bit surprised by this one. Supply constraints are an operational issue, not necessarily demand weakness. But for a growth EV maker still proving execution, those kinds of misses can dent credibility faster than for a big incumbent.
Let's pivot to the microcap and penny stock volatility. That was striking today.
Absolutely. We saw several names post triple-digit or near triple-digit percentage moves. TMDE jumped about 77% to $1.88 on roughly 86 million shares traded.
Wow, 86 million shares behind that move. That's substantial volume.
Exactly. Contrast that with KBO/NW, which surged about 62% to 65 cents, but on just 200 reported shares. Very different signals.
And others?
NRXPW rose about 74% to 2 cents on about 34,000 shares. FoxW climbed about 66% to 12 cents on roughly 97,000 shares. AMPGZ advanced about 64% to 10 cents on about 7,000 shares. It was a wild mix.
These moves illustrate how liquidity changes the interpretation.
Exactly. Large percentage moves paired with heavy volume, like TMDEs, suggest a liquidity-backed repricing or real news flow. Moves on tiny volume, the 200-share KBO/NW example, often read as transitory price dislocations that can reverse quickly.
Right. So traders need to factor in float and traded volume, not just percentages. Let's touch on the emerging markets angle. Vietnam's data caught some attention. What happened there?
Vietnam's first quarter GDP slowed to 7.83% year over year, from 8.46% in the fourth quarter, a deceleration of about 0.6 of a percentage point. Still strong by global standards, but it signals a step down in momentum that regional allocators will watch closely.
So not a crisis, but a cooling that matters for positioning.
Right. Cyclical sensitivity matters. If sequential industrial or export data continue to soften, that could shift portfolio tilts in the near term.
We should talk about where analysts disagreed today. The article highlighted a few debates.
One big debate was rate reaction versus technical optimism. Some strategists argued the job surprise justified the negative futures reaction. Higher labor strength means more inflation risk. Others pointed to breadth and said the pullback looked corrective. The question is, do macro repricings or market internals drive the next session?
And on corporate misses?
Analysts split there too. Icon's 2-cent EPS miss is tiny. Some call it noise. Others said in a high-scrutiny macro environment, marginal misses can be magnified, especially if guidance is weak. Lucid's delivery miss is being parsed as supplier-related for now, but repeated execution problems would change the narrative quickly.
Short reactions.
Wait, really?
Yeah, that tracks. Okay, practical implications by investor type. Start with macro traders.
Macro and rates-focused funds will be hypersensitive to incoming labor and inflation prints. The job surprise increased the probability of a near-term re-rating, so they'll be watching CPI, PPI, and weekly jobless claims closely for confirmation.
Growth and momentum investors.
Earnings dispersion matters more for them. Execution and guidance, especially supply chain commentary like Lucid's, will likely drive sentiment more than marginal EPS misses.
Value and income investors.
They may find relative value opportunities if rate-sensitive growth stocks get repriced, but whether that's tactical or structural depends on the pace and persistence of the repricing.
And short-term traders and speculators dealing with microcaps.
They should explicitly factor liquidity into sizing decisions. A move like KBONW on 200 shares is likely to reverse without follow-through. Volume-backed moves deserve different playbooks than isolated spikes.
What should listeners watch in the next few days?
Incoming data, CPI, PPI, and jobless claims will be front and center for macro confirmation. On the corporate side, guidance during the earnings season and any supplier updates from companies like Lucid will be immediate catalysts. For the microcaps, track overnight filings and follow-on volume to see if those spikes have staying power. And for Vietnam, watch industrial output and export flows to see if the slowdown continues.
Quick takeaways before we sign off.
First, the stronger jobs print forced a tactical rethink on rates and futures. But internal breadth signals suggest the pullback could be corrective. Second, earnings continue to show dispersion. Execution and guidance now matter a lot. Third, microcap volatility underscores the importance of liquidity. Percentage moves without volume backing often don't last. Finally, emerging market momentum is cooling in places like Vietnam, so regional exposure deserves a closer look.
Investment reminder. This discussion is for informational purposes only. It does not constitute a recommendation to buy, sell, or hold any security, and it isn't personalized investment advice. Analysts note the data and interpretations to inform listeners.
Yeah, absolutely. These are the themes we saw on Friday's tape: macro repricing, earnings dispersion, and idiosyncratic microcap action all happening at once.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next session to unpack what followed up on these stories.
Thanks, Drew. That's it for today's Alpha Recap. Talk to you soon.